The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 8th day of April. My pleasure to be here Monday through Friday, noon till 1 p.m. 877-927-6648 is the number to call. We haven't had overseas calls for quite some time. I don't even remember the overseas number. So let me see if Al will give me the number, then I'll announce it, and hopefully we'll get over the next day or so, we'll get some overseas calls and we can look at some of the overseas markets. So let's go straight to ours. Looking at the E-mini, S&P, it is down 650 at 2888.50. So 2889.50. There's this butterfly pattern here. Oh, I shouldn't have said that. That's a different pattern. Larry Pesavento's butterfly and mine are different. This is really a gull wing. Let's call it a gull wing pattern. That's what I meant to say. The gull wing pattern, where you've come down in an arch formation on the left, hit a low, make an arch formation going back almost to the same level. That's the 2894s. And then you start to pull back. Now, the big question is, if the E-mini goes under 2883 at any point in the next 2 hours, I'd say that that's going to be a short-term negative. And if it goes above 2896, I'd say, you know what? There's just enough room for some of these indexes, and we'll go through them right now since the beginning of the week. I don't mind doing a review. So let me show you what I'm talking about. The Dow looks like it's kind of stuck based on Boeing's terrible action, down 19 at 372. You see, for subscribers over the weekend, and thank you so much, I got a number of comments based on my webinar that I gave Wednesday night. Thank you very much. Positive comments, a couple of recommendations. I have been saying that I've done this for over 15 years, just an intense, every day I spend really literally hours on my newsletter, because I can look at this in 2 seconds and say, oh yeah, a bit of a pullback. But to explain it to subscribers, to my opening call, it takes a lot of words. Look, if I had to do it right now, I'd have to update exactly where we are, what we're doing, check out all the different indices, peak E in the 120-minute chart, probably a peak E today in the daily chart at 26,487, only a leg B in the weekly chart. There's that gull wing pattern. It looks like it wants to go to an all-time high. 26,952 will start a new high, but it needs a little bit of a consolidation before it can even think about that. So here I am. I already know exactly what I'm looking at. I even know now, if the day stopped right now, I'd tell you what I'd be looking for tomorrow. I'd say limited upside with a greater chance of today's low of 26,246 being taken out over the next 2 days, with a very good chance 26,157. The 9-period exponential moving average will become a target. There is also Chapman wave potential instant restart if we go above 26,487. But I'd have to say that in this particular pattern, it has to be by Wednesday afternoon, Thursday morning at the latest, without taking out the candle low of Thursday with a low of 26,212. Look at this. These are all the things I have to say, and I have to write it down. And as I'm writing it down, I've got to correct it, any of my spelling mistakes, and etc. So everything takes a long time, even though when the day's closed at 4 o'clock, in my mind, I'm pretty much done. I just have to write it and talk about it and discuss it in terms of what I would like very much for my subscribers to know. Well, I've decided after all these years, I'm cutting back on some of the charts. For instance, I didn't show this because I could show it right here. I didn't show this particular chart, which is the, let me go to it, LT. This is it. This is a chart I always show on weekends. It is the yield, my triple yield chart. Maybe this is the first time in decades that I didn't even show it on Saturday. I didn't think it was worth it because I said we've reached some kind of a low. There should be a balance in yields, pull back in the TLT, and taking its time. Oh, I've got too many charts, so that's why. So there it is. So we hit that pink. You remember I showed this pink 28 2.8 on the 30-year. I said, we've been there. Look at all the years. I could even squeeze this close. Look, squeeze, 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 all the way through to the big spike up back in November of 2016. We have been at 2.8. It's not a big deal. It's the direction that the Fed is taking us that's important. And at this particular point, I think talk has been done. I think there could be a little bit of a bounce down in yields, and then they're going to be stuck in a range. All right. Here's the 10-year. The brown is a TNX. The cyan is the 5-year T-note. A yield made a trough. This is a trough D. Those are only C's in the 10 and the 5-year T-notes. But the T-bond has gone to a D, and now you can bounce. And yep, we could bounce, and that's important. The other chart always shows wood. It had a very nice rebound, but it hasn't made the U shape. This is the inverted Y. Look, you go up, then you make a cup formation, the drop bucket formation. Hasn't pulled back, hasn't broken out. But if wood, the iShares Timber and Forestry ETF can pierce 66.92. If it can get into the mid-67s, I'd say that's really good action because it's decisively, I'm going to sneeze. Why do I sneeze between noon and 1? Here we go. Hold tight. Nope. Yes. Nope. Yep. Nope. Yep. Nope. All right. Have not. 65.82 on wood. The Timber and Forestry ETF. This is international. And here's the very strong action in leg D. Have we made a new recovery high in the first 2 hours? 307.12, 306.97. We haven't yet made a new recovery high in the weekly chart. So this is a D. We're watching this closely. Yields should lead, very low yields should lead to a strong housing market. And the HGX is okay. It's not great, but it definitely is much, much better than it had been. What is this one here? Oh, this is what I spoke about in my webinar. This is the Dow monthly and the IYT. This is a transportation index monthly. You can see the green is where one makes a top and pink is where the other makes a follow through, and then they turn down very sharply. Did that right here. So that's what I discussed. So I've made some decisions. I'm going to try to cut back a little bit. In fact, this weekend was great. I did work very hard, but I still managed to have a pretty decent break. I need time. I took some time. It's good to think. So I'm going to cut back on some of the charts, not on my work, not on my Traders Corner, but I want more time for us to be looking at stocks and what we're going to do on the short side, the long side, etc. And I'd like to be able to follow. I usually have 6 to 8 stocks, maybe 9 occasionally. When I get to 9, you know that there's some kind of a top in the market, even if it's mixed between long and short. But in this particular point, I'm just holding back. We've got really nice positions, exactly what I've been looking for. Missed 1 or 2 that I would have wanted, waiting for them to pull back. So I want space. I want room to have a nice portfolio, expecting that the Dow is going to make an all-time high this year, and the others are either leading or following, but they should all do likewise. That means even the IWM should have a very good rally after this leg D, maybe peak D's completed and has had a bit of a rest. Here we go. We've got a break coming up, and the Dow is down 144. The S&P is down 6.98. Big divergence. Why? Because Boeing is down 19 points. It is a big factor, even though there are a couple of stocks in the Dow, like Home Depot, that's doing well. I'll be right back. Basil Chapman, Tiger Technicians Hour. Get your calls ready. Get your questions ready.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. We're back, and the Dow's down 142. The S&P's down 6 3/4. So, what I am looking for is if this is it for the Dow, it pulls back, and then there's a new high above 26,487. That's probably a Chapman Wave instant restart, and we could go higher. That would imply that the IWM, which is holding really nicely here, down just for 66 cents, could go to the 159.50 high of 25th of February in the time period. This is a little too soon, I think. Oh, by the 10th, that's 3 days' time, 9/10, that's Wednesday. I just don't think that's going to be the case. I think that, in fact, I'm going to have to move my plumb line to this level here, which would take another couple of days. I think it has to wait a little bit before it can go that high. It first has to break 157.47 for leg E, if it isn't today. And the MACD is good. Stochastic's very good at 89%, but I'm not getting quite price action quite as strong as I would like. And also the IWM weekly chart is right at the Chapman Wave. Let me just do this here to show you. Green, this is the Chapman Wave. Oops, right there. Yeah, this is the inside track, repellent zone, where it's been repelled many times before. Make that red. It's right inside, and it's about to break out. I'm going to move this up just a tad. Yeah, this is a very key moment for the IWM. The technicals are improving, prices improving. It has been a laggard. Laggards tend to catch up if the leading groups continue to rally. So we're going to be watching this. The other thing that I'm looking at here is within the context of the SMHs, which went to within 2 points of their all-time high. I mean, that is incredible action. Down 47 cents at 112.07. Peak E just got repelled to the Chapman Wave inside track repellent zone. And it broke above the weekly. That's now very good support between 110 and 108.50, I think. Yeah, 108.50. We're going to be watching this at only a leg C in the weekly, so it still should go to a D. This is really incredible. Yeah, let me just say, it's incredible. But look at the gaps. It hasn't filled that gap, the one that were there from the beginning of April around the 3rd, around the 1st, and then the next one was on the 3rd. It's got two big gaps and it hasn't even come close to filling them. I think it will, and that's why I'm suggesting to you that this is a period that we've just come back into a period where there's some geopolitical, political, and some technical resistance levels that we're looking at. So I wouldn't be surprised if this week's a bit choppy. Maybe one or two indexes go slightly higher, others start to pull back. I'll be looking at. Okay, I want to get to a lot of calls here, but just let me quickly say that the EUR USD had a nice bounce. It is up at 1.126, up 0.004. This is good. You've made a potential, once again, yet another Eiffel Tower pullback, not taking out the left side low of 1.117. Now you could see some kind of a rebound in a cup formation, and a huge bowl formation is formed in the weekly chart. Yeah, this is better action, but really it's not good action at all. It's just better. And the monthly chart is still looking terrible. Looking at the dollar once again, dollar had its the test of the left side, right side. So this is the pattern that we were talking about. I said this is closer to what I would consider a potential head and shoulders. Left side head was back at 97.37. I should have put the date on the 15th of Feb. The 97.71 high that was made right there on the 7th of March. That's the head. So left side shoulder, right side head. Pulls back sharply to the 200-period moving average, goes all the way back to 97.51, was it? 52 on the 2nd of April, makes the potential right side shoulder. If it pulls back below 96.50, let's just make it 96.32. That's going to say, hey, you know what? We could have, in fact, some kind of a head and shoulders top here. But meantime, back at the ranch, this whole series of double tops, triple tops that we're making in the 97, mid-97 area says, you know what? There's a good chance it's going to try to bounce right up against it again. Look, the MACD is so close to turning up. It's deflecting lower today, but it's trying its best to turn up. Stochastics at 75%. I say there's a little bit more veracity for strength in the dollar over the next 2 weeks, I think, than weakness. That's what I'm saying. We'll see what happens. All right, questions. Here we go. LGF.A. Now, we used to look at this periodically, but I haven't looked at it for a little while, and it's changed its name. Now, Lionsgate Entertainment Corp is an A share, so that very long-term chart that we used to look at, that's out the window. This is a more recent one. It's an leg D daily. So what I've done is I've shown you there's a cup formation after the H formation succeeded, even though it took out the left side low, it didn't close below it, and now it's turned around, and the lowercase h goes to a very positive cup formation, but it's within a weekly sideways trading band. In fact, I've got a rectangle here. I like to take rectangles and shrink them, not expand them, because if you shrink them, you can get a much better idea of your parameters. So this is what I'm looking at here. Let's just get out of that. There we go. So this is what I'm really looking at. I'm looking at this level as a low, that level as a high, and within it, it's making it, oh, why are you doing that? Within that, it's making an arch formation and a second arch formation. That arch formation needs to get into the 1720s. I'd really like to see 1750s within a week. I'd give it a whole week without taking out the low of 16, without taking out 1620. That'll be really positive. It is a very quick peak, A to B to C to D, from the most recent low of 14.62. Let me put that in here, 14.62. So the question is, I'm not sure, but I'm going to say that if you're long and you've held it all the way through from even to the low that was made at about 13 in the 1390s, and it's gone all the way over 18 and now it's pulled back again. If you're still long, you've been long quite a while, I think that's a better way to play this than to be trading it. And what I would say to you is hold it if you're long. If right now, do I buy, do I sell at 16.65 on a daily basis? I really like what I'm seeing. So I would say I'd buy it right here at 16.65, but only a small position. But I would have $16.20, $16.10. That's a big stop for me. but I would have that kind of stop in. Why? Because under these market conditions, it seems to be just doing its own thing, and I like that. The weekly chart suggests that it's got a lot of work to do to really repair, that to break out above 19.08. If it can get over 19.08, that's really positive. In the meantime, I think it's got a lot of support in the 1620 to 1580 on a short-term basis. I wouldn't want to see that taken out, but that's what I'm looking at. So yes, I would be buying it, but only a small position. Something I would add to over a period of 3 to 4 weeks if it continues to build a decent base. It's the kind of stock that before you know it, it just has suddenly spiked up and you say, well, what happened? The pullbacks now are regulated because it's got a good cushion. So yes, I like it, but it has to get to the 1750s for me to really like it. I'll be back. Dow's down 131. S&P's down 6.5. I'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later found the computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, everyone, we're back, and we're going to go straight to our first caller. We got Mike in Ormond Beach. Hi, Mike. How are you? Whoops. Was that a bop that I just heard? Mike, are you there? Mike, call back if you can. I know you wanted to talk about the Dow. I should have mentioned before I went to the break that I saw you there. Sorry. So if you can, call back. It was a bop you heard. Yes, I did. Okay, Mike, try to call back if you have a chance. I know that sometimes you got limited time. I try to get to you as soon as I could, but I only saw you right before the break. So, but to talk about the Dow, let me see. I'm going to try to anticipate Mike's questions. the big question I'm sure that's on Mike's mind is, where are we going? And the target is 26,952 to start a new leg up in the monthly chart. There's a rising wedge formation at 26.95 as the high, and that goes to June, and it comes in around about 27,200, 27,170s. And the time sequence, if I'm correct about the time sequence, it should be by about June. But on the shorter term, especially now with, if Boeing wasn't the issue today, I wouldn't be surprised, down 19 points. I'm sure that must be at least 60 or 70 Dow points. I don't know what the ratio is. All I can say is that the market's acting really well considering, but these are the factors that I'm looking at. The daily chart of the Dow suggests that 93% that the stochastic is very strong, and so far, I have to say so far, it's flattening out, but by Wednesday we'll know, because if it's down at 91%, and then 90%, then 89%, that means it's good, but it's starting to decline. And the MACD, while it's very strong from where it's been, it's way, I mean, there's not even a comparison in the MACD to where it was when it was making just the February high, 25th of 26,241. It's down. I don't have a percentage on there. Oh, I do have a percentage. 196, 198 by 47. What was it there? It was, am I going to be able to do this? Let me see if I can. 424 by 31. All right, yeah. There's a huge difference. So I suspect that this is going to be a little doji candle gap down, peak E, that says short-term top is here. Near-term, I'm calling it near-term right now. Short-term for me would be going into 2 weeks, 10 days to 14 trading days. So it could be 3 weeks. Near-term means a pullback right now, and then I have to assess. I haven't even got a sell signal yet. This is not even peak E. I have to wait for the end of the day. If it doesn't break above 26,487, which there's no chance that it's going to do that today, then I can call it PE. And then I have to see where it comes down to and what level of support. 120-minute chart says peak E, and it's pulling back right underneath the key moving averages. So on a short-term basis, I'm calling this a consolidation. We have a position in the Dow. My thinking here is that it would take me, I would like a pullback closer towards 26,000, preferably under 26,000. I'd like it to hang out in the 25,900, 25,800 area for just a little bit. That was that delayed sneeze. I don't think I sneezed all weekend between noon and 1 o'clock, unless we stand outside. That's the Chapman gene. You stand outside in the sun, we all sneeze. So as I'm looking at this right now, that weekly chart is still really strong, and it suggests this whole containment area here in the weekly chart between 25,800 and 25,600 could really put a nice cushion, a floor under it. And I really do think that there's going to be a move towards the upside, and we just have to have a little patience here. And I think they're just a conglomerate of actions here that are purely fundamental, that might be impacting the technicals, besides the fact that Boeing is a drag on the Dow. If you look at the S&P, so the answer, I'm not sure if this is your question, Mike. I suspect it's close. And so we're anticipating, preparing, and have prepared for a pullback in the Dow. So far, it's only the Dow that I'm really looking at for weakness. And that weakness should, in fact, be contained. There'd still be a chance of an instant restart without taking out the gap low of 26,280.90 from the first. If we don't even go there, and then we start to take out the high of 26,487 on Friday, that would be really good action. That would give me an F/B, but my thinking would be it's probably a B, and the IWM, the S&P, and all the other Qs should all be responding very positively. If you look at the Qs, look, very high level consolidation. It's going to be so easy for us just to have a quick little eye blink into the 184.93 level to give me a D, but then you've raised the base of support. The MACD and stochastic are good in the daily chart. Weekly is really outstanding. I just don't see more than, unless it's just really bad news that suddenly comes on and the Dow breaks 25,850 by Friday. The S&P breaks, it's at 2896, breaks 2878-ish, somewhere around there, 2782. And the QQQ takes out 182 support. That's going to be a big deal. I'm not sure I'm seeing enough if you understand the waves, the ocean waves, sometimes it looks like a wave has come up to the shore and then it's going to pull back and then build for another big wave. But there's another wave that's running along and it stalls the pullback, but it also takes away from the forward movement. That's kind of what I'm looking at here, that there are cross currents. And as long as they're cross currents, it's putting a bit of a cap on the upside just for this moment. All right. Next thing I want you to do is, so Mike, I'm doing something here. I hope you listen to it, and that helps you. And it's saying that there are a lot of areas of support for the Dow here, but I am expecting more time than price to pull back, and then I think we're going to start for the next move up. I just don't know when exactly. So that's really what I'm looking at. Next question I had was, would I look? Question. So I did LGF, right? .A. Next question was MMC. Just real quickly, MMC. Where is it? It's at a level here. Oh, I could call that A, B, C, G/C, D. So this is a D/B. All right. The MMC is Marsh. Is it Marsh? I think it's Marsh, not March. Yeah, Marsh and McLennan companies. They do insurance brokerage, risk management, that type of thing. It's in the financial area. It made an all-time high just about 5 days ago. Acting very well. Leg C in the weekly chart. Leg E/A in the monthly. I don't want to take time right now. It's got a Chapman wave flat base restart. I'd drawn that in, but I hadn't updated until I got the question, which meant that I had about 3-4 weeks of work to do here. And I like this very much. It's in the area that's making new highs very quietly without anyone talking about it. So let me just say, MMC at 93.45. It's in a rectangle formation. I wouldn't be surprised if it digests a little bit longer, but it should be going to the 96s in the next month. And then I want to do some work on GE. I'll do that when we get back. GE is down 83 cents at 918, down 8.24%. I had a question about it. I'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently
currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, you can see the E-mini right here just stuck in the range. It went down to the 28.87 area, now it's at 28.91, right at the 200-period exponential moving average. Just remember by, say, 250 to 310, if the E-mini is up in the 28.96 area, that's going to be very positive for the close. And if it's down below 28.86 right now on the shorter term basis, probably going to test the 28.84 level. I see rotational inner strength, but I also see some weakness. Here's GE down 84 cents at 9.18. So the question I had was from George in New York. Hi, Basil. Hoping all is well. You were right. G is finally breaking. We may be able to get in at 8.20 to 8.50 price. Have a good show, George, New York. Okay, thank you, George. So, yeah, this is what we've been looking at for a while. I said I probably would want to reassess if GE has a decent move because it needs to come back. The question was, is already in leaps and very long-term positions, thinking that they will get things right at some point. I don't disagree with that. It was just the next entry point, and I'd said that I believe somewhere in the 850, 820 area is probably where you know your risk because it's actually come down after a bit of a rally. This happens to be a weekly peak D. Fabulous percentage move from the 666 area just over 11. I mean, close to a double. That's really good. Now it's giving back a chunk of that gain, and it's in the dreaded H pattern, the lowercase h. If it takes out this closing basis, if it closes under 905 for any particular day, if within 2 days after that it can't close above 905, that's a problem. It's probably going to go down to the next level of key support, and that would be right there, that little trough at 823. So getting towards that area is where I'd start to look at putting in another position. This second position, because it's after a D in the weekly chart, it says that either it's going to work fantastically because maybe it doesn't even go to 850, but the next rally takes it over 1129, the high of the week of the 1st of March, or it's going to make an H pattern, go down, and it's going to have a big test in the middle of that whole range between 850 and 820. My thinking is the latter. I don't think all the work has been done, but the work has started, and that's important. All right, good. Next question is GS, Goldman Sachs. You know, Goldman is holding pretty well in a high-level consolidation. Let me show you in the weekly chart. You see this? I suppose I could make it an oval pattern. It's more like a rectangle. I'll just make it an oval for now to show you exactly what I'm looking at. If over the next 2 to 3 weeks, the Goldman has not taken out the low of the 29th of March, that would be at 186.50. It's at 201.86. That'll be quite a pullback. If it does that, that means it gives back all the gains of the last 3 weeks. But if it does take that out, that's very negative. On the other hand, if it breaks and closes above on a weekly basis 206.45. If it closes in the 208s, that's a Friday close at 208 or higher, I think that it's made a significant low and that there's a real good chance that this whole area between 185 and 200, let's call it 205, has been a consolidation move for a propeller shaft move to the upside, going to 230 sometime this summer. Ooh, that was a statement, wasn't it? That's what I'm thinking. It's a start. This is a really good start. And here's that V-shaped formation we're looking at all over the show. How it handles the top of 206.45 that was made on the 19th of March is going to be really important because the 14-period moving average is way down to 197. The 9 is at 198, but the 200 is at 207. And that's going to be a magnet if it even takes out the high of Friday. Friday's high was 205.50. Just has to take that out and it'll be very positive. Okay, next question. Boy, a lot of questions. Next question is, where did it go? XAL. XAL is the airline, ARCA airline index at the 200-period moving average of 101.46, down 83 cents, 101.46. What's happened with Boeing, because they've had a lot of preparation time and they've been able to juggle planes and do all sorts of things, I do think that the summer travel plans are going to be impacted. So hotels, let me see what Marriott's doing. Marriott is up beautifully, breaking out legs C in the weekly, brand new A leg. I'm calling this not a G but a C. I'm sorry, a B in the daily. Now I have to call it a G/C. Everything looks like it's a G/B. Everything looks like it should be. Let me take that away. Yes, everything looks like it should be a B, but just to be safe, because it's made a cup formation breakout from the peak F over there. Oh, that could have been a, no, I'm not getting fancy. I'm calling it a G/B. My emphasis should be B/G. For now, this is a leg C in the weekly. This is really good action. I didn't expect it, actually. Married breaking the monthly falling axe formation decisively. Month is just beginning, really, but this is very good action. This is actually leg B, gray leg B in the monthly chart because the technical is only now starting to improve. There we go. So very nice. I'm so pleased to see that. It's really important. You want to see the hotels like the Marriott doing very well. Question I had about, where was that other question there? Oh, it was right here, and I promised I'd get, Roku. Roku, funny name. Roku has made a lowercase h that goes to lowercase m and then plop to the downside, makes a recovery high of 74.35, all-time high, all-time. 77.57 was the October high. Pulling back. We had looked at this as a potential short, and then I said, there's just too many conflicting things here. And what happened is it did pull back from the 69 round number high on the on 25th of March. Does not take out the 59.63 low of the 14th. Makes another bigger arch. It's almost like a 1 to 1, A to B equals C to D. Yeah, it's just like that. And now it's taken everything out. It's gone below the low that was made on the 14th, 59.63. Today's low, it's right at 59.36 right now. So it's gone lower. The low today is 58.35. I think it's bumping into a lot of resistance here in this rectangle formation. It's taken out the support level. MACD's lousy, stochastics lousy. Weekly chart is not bad at all technically, but if it closes under 57, if Roku closes under 57 by Wednesday, there's a real good chance it's going to fill the gap. It's going to go all the way down to 54.50 was the low gap up high of the 22nd of February, and the previous high was 53.90, so 54.50. 54s would be my target, but only if it closes under, I'm going to be more specific, closes under, there's a 120-minute chart right here. Yes, if it closes under 57 in the next couple of days, there's a real good chance it's going to test the 54s. Wow, that was time. We've got one more segment to go. Basil Chapman, Tiger Technicians Hour, and the Dow is down 127, S&P is down 5.5. We'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
All right, so let's just do a couple of things real quickly here. We've got Apple, which is up 2.24 at 199.24, acting really well. That's helping the Dow, and it's in leg C in the weekly. I do like it. It's way under the 233.47 all-time high, but it did smash down to the 140 level. This is a really good comeback, really improved technically, looking much better. Amazon is right now in leg F. I'm saying in the daily chart, technicals are very good, weekly is very good. Still 2050 was the high, 1307 was the low. It's trading at 1834 right now in the middle of the whole range. Good action. Goog is trading at 1202, making a little lowercase h pattern. Could be failing here, but it's had a very good move from the 970 low to 1202. And yeah, actually, this is not too bad. Just a digestive phase. Question about NBEV. Yeah, I saw it when I was at the health at my fitness club. It was up. Whoa, 586 up $1.08. doing very well. Hit the 200 period moving average. Look at that, exact in the daily. That's why I use these things. I only need them when I need them, and it was right here. Of course, I didn't see the move up. This is really good. And the weekly is improving. Now, this is a bounce within a range. Let's see how's it affecting the MJ, which we are long. MJ is down. You see, that's the thing. We've got the ETF because I wanted the big picture. I told subscribers we're going to be looking at individual stocks again at some point, but just as a generic thing, MJ's fine just to hold it. Well, we've got a really good gain in it, but still, we are just going to hold it for now. So as we're about to wrap up, you're going to go to Steve Rhodes and Dave White and Tom O'Brien. Just wanted to say, in my opening call, we're still got our long positions. We added a short position here, more as a trading range, just a trading position. We'll see how that's going to work out. Most importantly, let's just go back to, and I had a question about the VIX. I'll talk about it tomorrow for my TVIX that I always have in my opening call for subscribers. It's really a special thing. We hardly ever use it, but I do have it there. It's kind of, it gives me a sense of what I'm looking at. So the VIX right now is at 1341. If it closes the day under 1320, the market will be very strong. If it goes back to 1365, 1373, you'll see weakness come in after 3 o'clock. Have a great day. See you tomorrow. Check out my opening call.